Beautiful. Very good afternoon, ladies and gentlemen. Thank you for tuning in. By way of introduction, my name is CJ. I run sales for APAC and EMEA over at GSR, one of the largest market makers in the altcoin space. It's my pleasure today to moderate this session that we're going to cover the topic of unlocking liquidity fragmentation within crypto derivative markets. And with me, we have a special guest today. We have Mr. Anand Gomes, who's the CEO and co-founder of Paradigm. Welcome, Anand.
Hey, welcome. Thank you again. I appreciate you guys having me.
No worries. Well, before we get right into it, sir, I think just for the benefit of people on the call as well, why don't you do a brief introduction about yourself and as well as Paradigm? We would also love to know about what inspired you to begin your journey on Paradigm.
Yeah, sure. So hi, everyone. My name's Anand. I'm the co-founder of Paradigm. Paradigm is an institutional liquidity network for crypto derivatives traders. What that means is you can think of us as a wholesale marketplace where institutional buyers and sellers such as CJ come to us to source, to make and take liquidity. On any given day, our claim to fame is options. On any given day, we're about 30 to 40% of the global options market for mainly Bitcoin and Ether options. And we also have a fast-growing spreads business, which is effectively we offer order books on spreads, such as the spread between spot and perp, and so on and so forth. So that's the business. Volume-wise, we do 400, 500 million of ADV a day. With respect to my journey, it started, so I have, just like CJ, I have a background in from the traditional market. So I was on a bank desk for many years, started out as an interest rate derivatives quant, then moved to the trading side, then did a stint in sales. So sort of did all the roles that a junior person could do on a trading desk, and then eventually landed up in commodities, and then later on from commodities and specifically OTC, and then from then on, did a little bit of high yield as well, but all for the same bank. And the origin story for Paradigm actually started off when I was on the desk, and as most of you know or not know, OTC trading is a very manual business. There's a lot of sort of like workflow related stuff where you're trading something a non-standard, and therefore it means the mode of transactions needs to be bilateral or between or peer to peer, and because of that non-standardization, there are no sort of like standard platforms or workflows that you can use, and I hated that. I love my job, love everything I did about pricing and trading and structuring, but I hated the workflow aspect of it. Right, I was spending 2/3 of my day doing a trade booking, mark-to-market statement reconciliation, all the end of day stuff that took more time than the actual trading itself. And so I hated that. And in my mind, I'm like, wow, we have an era where we have all these like the computers are so advanced, and why are we still using chat to trade? Why can't there be a platform? And so that was kind of that was the origin of how the genesis, I guess, of the idea. And then eventually I decided to do something about it, and it took me a couple of years from idea to actually mustering up the courage to start a company or build a platform. And eventually initially the idea was still to do it for commodities. So I had no ambitions of crypto. Crypto was this like thing that I was loosely interested in on the side. I'm a computer science graduate, so I was very interested in the Bitcoin white paper when it came out, but I'd never thought I had anything to do with work, right? Because I was a trader on a trading desk, and then when I built this platform, I was lucky enough to meet a few people in this space early on, and they all complained about not having a solution to trade size when they were trading spot. And this, I'm talking about 2017, 18, when the market was just sort of like beginning to sort of like grow. And I'm a friend of mine suggested this idea. He's like, hey, you've built this platform, or your ambitions are to build this OTC platform to trade commodities. Why don't you use it for crypto? And I was like, yeah, it's never thought of it that way, but it was a great idea, and we explored a little bit more. And then it was very clear to me that this has to be for crypto, mainly because it was the beginning of an asset class. And I thought to myself, I was like, when is an asset class being born? It sort of happens once in your lifetime, if even. And, it's an opportunity for us to be a true first mover in this space, right? Either I spend my time building a platform for commodities traders and fighting the inertia of that market, because people don't want to change, right? Usually when you have a workflow, it's very hard to get people to change. So either I fight people doing that, or people in this market are literally begging for the solution, right? So the probability of success seemed sort of like asymmetrically higher in crypto. And so that's kind of how we started. Initially, again, with a small, we instead of starting with spot, we decided to start with options, but it was a similar line of thinking where we said, hey, spot will be quickly commoditized. Options is something that's kind of unique, and back then there was absolutely nothing in options. There's only Deribit was around, and they were doing, I think, 20 to 30 million a day. And so Paradigm in that sense was as much a bet on the platform itself as it was on options. And the thesis was, hey, if spot is taking off, options are going to take off at some point. It just in the evolution of sort of like how a market evolves, it just comes a little bit later. So that's the story.
I mean, I love it. I have a very let's kick it off on the meat side of the discussion then. If you were to look at where crypto markets are right now and crypto derivatives, my background similar to yours is derivatives. Where would you rank we are within that space from both a scale as well as an evolutionary standpoint, with 10 being very mature and 1 being, oh my God, it's barely seeing the light of day right now?
It's not an easy question to answer, because in some ways crypto is very mature, and in some cases probably more mature, more advanced in the adoption of technology than even traditional finance. But in terms of the maturity of participation with regards to client types or risk takers, I think in that sense it is sort of lagging, right? Where we don't have the structured product flow, we don't have all of these sort of like derivatives that we're normally used to. There's sort of like commonplace in TradFi. We don't really have them. But I don't think that's a bad thing. I think that's just again, it just takes time for certain things to come about, and the base layers sort of need to be sort of in place before innovation on the top can be sort of like can happen. And so from a technology perspective, I think crypto is very advanced, if not more advanced, because I mean literally we've created a world that anybody can access from any place in the world, and you have access to spot, you get access to futures, options. You can do it from a custodial standpoint, a non-custodial standpoint in DeFi. I mean, it is truly a miracle in my mind that in the last 10 years we've really built this thing from the ground up. And I always say to myself that Paradigm as a platform has gone through the same amount of evolution that TradeWeb, which is kind of our counterpart in the old world, what they took 20 years to do, Paradigm was forced to go through in like 2.5 or 3 years, right? So that kind of gives you an idea, but that's mainly from a technology standpoint. I still feel like there's so much to do in terms of innovation, in terms of product innovation, and also opening up access so the institutions are just like dipping their toes right now. I still think there's so much more we need to do to truly welcome these folks. So from that regard, I think we're a little bit behind, but from a technology standpoint, I think we're right there, if not more.
Well, fantastic. Well, hold that thought. We're going to come back to the institutional question a little bit later. The part that I want to cover very briefly with you is this. I think we can establish the fact and with an understanding that liquidity within the crypto derivative space right now is fragmented. Mm-hmm. And I think a large part of that, if you think about it, is fundamentally because you have that concept of CeFi and DeFi and the nature of the different players in the market. Do you ever see a world where this merges, or do you think it runs in parallel? And if so, on either view, what do you think is the right, I guess, outlook in terms of structure to put in place to mm-hmm. have this sort of better liquidity in space?
Yeah, look, I think unbundling and rebundling is just kind of this perpetual cycle that human beings sort of go through with every technology cycle, right? But it's kind of anchored in the fact that it is easier to do things individually and move faster from an innovation perspective. But from a utility perspective, it's always higher utility for a customer to have everything in one place. So those are kind of like opposing forces that kind of like drive this this kind of perpetual cycle that we're in. And CeFi and DeFi are kind of in the same boat in that sense. I mean, this evolution that you just talked about is governed by the same forces. And I think Paradigm is a good example of that. Not to shill Paradigm too much, but I think we're the only platform in crypto that has a regulated venue such as the CME. It has the unregulated venues such as Deribit, and we also have DeFi on the same platform. And if you want to trade an option on the CME, you can do so. If you want to trade an option on Deribit, you can do so. If you want to participate in ribbon auctions, you can do so. There's no platform in the world that I know that can do that, right? And so ultimately that was driven by client need. That like, hey, we saw our clients saying, hey, I want to participate in ribbon auctions, but the process of doing so is very inefficient. And can you just make it a part of the Paradigm RFQ workflow? And we said yes, we can absolutely do that. And the platform was built to be asset agnostic and network agnostic, or settlement solution agnostic, and therefore we did that. And so I think, to answer your questions, I think where we are today is all these like different innovations that are like sparking CeFi, DeFi, but they're doing that because they want to move fast. Ultimately, you do need someone or something to combine it together. I mean, you see this even in like Microsoft, right? And Microsoft as a platform versus Google has this like loose connection between their products, but Microsoft is very sort of like tightly integrated with each other, right? And so it's I think they're both needed. Right, it's just like one happens earlier than the other, and then later on somebody hopefully comes along and tries to unify them, or somebody builds it from scratch and unifies them. But that's kind of hard to do, and that's what we've sort of found. But yeah, hopefully that answers your question.
No, fantastic. Shill as much as you want, my friend. The way I look at it is, if you got it, flaunt it. And it's obvious that Paradigm is in a very unique proposition space. You actually mentioned something which I liked, and it sort of alludes to something that at GSR, we've used Paradigm since almost the beginning, right? It's been one of those things that we've sort of grown with you. What would you say has contributed in terms of the evolution of product? Because you mentioned one thing where you were trying to fit the need, a solution, because you asked your client, what did they want? And you built upon that. It's a very different approach, because in crypto right now, unfortunately, a lot of people come up with product, come up to solve a solution or a problem that's technically in their head. It's not really something that we've asked for in the street. I mean, what sets Paradigm apart there then?
I think, if there's one thing that sets us apart, it's truly that we've always been driven by, what is your pain point, right? Even when we first started, it came from something that I felt on the desk that, hey, I'm spending 75% of my time with booking workflow and doing things that I should not be doing, or not should be doing. It's better automated. Let's put it that way. And so it started, that was sort of like how the company started. But when we started in crypto and we moved to options specifically, there was a Telegram chat, and this was started by a friend of mine who now runs another company, but he was like the largest market maker on Deribit at that time. And, I met him and he's like, hey, I'm the biggest market maker on Deribit. And I'm like, okay, well, how do you source liquidity when you need to get out? And he's like, oh, I've just created this chat and I go in and I post my axe and hopefully somebody comes in and takes the other side. And I'm like, that's insane. I'm like, so, okay, even if you do that, how do you actually cross? And he's like, oh, we then agree to put our order at the top of the order book and somebody aggresses it. I'm like, wow, you have leg risk and somebody can front run you because those conversations are public, right? And so it was very clear that this solution, that institutions wanted to be a part of this market. They wanted to trade size, they wanted to trade multi-leg, and they wanted to keep their orders away from the order book. And because this is what institutions need, like that's how they play. And so we knew that there was no solution out there. And so that was how we started. And then since then, conversations have, the evolution of the product has been, what are we missing that you need today? Right. And we have 500 chats open with all our customers globally. We have, very deep account management and product team that is constantly talking to you every day, 24 hours a day. We have a global desk that never sleeps. There's always talking to you. So I think if there's one thing that sets us apart, is that we truly understand your workflow, that because we've sat in that seat, we've clicked that button, and we understand what your pain points are. And we're not just satisfied saying, hey, we came from TradFi, so we understand your workflow, because crypto is unique, right? So the crypto angle makes the institutional traders angle sort of unique. It's not the same as equities somewhere else. But so I think continually being in that seat and talking to you and understanding that, like, hey, what really is like your pain point, and then distilling that back and then basically making the product better. I think that's what we're known for. If you ask anyone in the market, I think I'm most proud of the fact that when you meet people globally, the first thing they tell you is that, hey, your customer service is amazing. The how fast you react to our needs is amazing. And I'm like, that's all I want to hear, right? It's like we're listening to our customer, because that's the only person that matters.
Yep. No, fantastic, and I fully agree with it. Paradigm is almost unrivaled customer service. It's fantastic to see and to hear it from yourself as well.
Thank you.
So as we progress, right, and as crypto derivative markets continue to mature, there is going to be a bifurcation between CeFi and DeFi, right? DeFi obviously had a DeFi summer, didn't really go, but it does feel like it's going to come back in another form. How do you think this re-evolution is going to affect that balance with regards to liquidity for crypto derivatives?
That's I think with all these cycles that we're having, DeFi and NFTs and so on and so forth, there's of course the bubble and the hype that that comes around, and that's just part of the early stages of any product's life cycle, or any sort of asset product, whatever you want to call it. But when those fads or hypes sort of go away, those temporary fads, there are these like quiet innovations that they bring about that remain, right? And over the last 4 years, if you keep adding up those innovations that happened, and then okay, maybe the hype went away, but the innovation remained, and then the next cycle happens, and then something else happens, and now over 2 cycles, you have 2 things that have permanently made the market better, right? Now the tourists, come in this market, and then like they play the hype and they're out. But the builders, like, we're out there, we're looking at these things, for the last 4 or 5 years. And it's very clear to us that, like, DeFi, I mean, there's a lot to DeFi, right? Everything gets rolled up into DeFi. You have product innovation, you have actual blockchain innovation, the things it powers. And we care mainly about from a builder's perspective. And we've seen really cool things, like DYDX is a great example, right? Like they were the first sort of like crossover company where they said, hey, you know what, we don't want to trade off performance and liquidity for the promise of decentralization or whatever, right? And they said they took this sort of hybrid approach, and we look to, and those are like pivotal moments, I think, in a market's progress, where companies take a view that, hey, we can use the best of this world and the best of this world, and we can actually push the ball forward. And so from an infrastructure standpoint, I think the market is getting better and better and better, where all these primitives that exist in CeFi can now firmly exist in DeFi without the trade-offs, the performance and security trade-offs that you sort of the DeFi sort of has a bad name for in some sense, right? But I think that is like firmly getting better. And now that you have comfort doing that, you'll see more and more companies building these things squarely on chain, including the interconnectedness of things, which ultimately will make things less fragmented and will make things more liquid as a result of that.
Fantastic. And I think hopefully we see that within the next 1 year. It's been a bit of a quiet winter, but I've heard volumes have picked up. It's fantastic. But you talked about cycles. It's very interesting you did that. I still recall being in New York when Lehman went under. And that was pretty much what the 7-year, right? And in banking, we used to call it every 7 years, proverbial shit used to hit the fan, right? FTX came and went. And that was probably one of the biggest shocks, especially to the institutional trading, because they covered a large part of it, be it the most efficient type of cross-margining, spreads as well came with them. And I would like to get your take on that. I mean, has someone come in yet to fill the void that they left? And if so, how? But more importantly, what are the lessons learned then? Have we actually gone ahead of that to make sure this doesn't happen again?
Yeah, I mean, FTX was definitely a Lehman moment in crypto. Last year, I think there was like 5 Lehman moments, and so it was like, what is really happening here, right? But in terms of our business being affected, it was FTX we had a very big business on FTX. 25% of our volume was tied to FTX. 15% of our revenue was tied to FTX. So when FTX went away, it really hurt us, right? Of course, markets bounce back and we're doing all-time highs again. So we've been lucky in that regard. But yes, it did affect us, and FTX's clients were our clients. There was a lot of like synergy. We're finding out now as we're trying to rebuild that future spread business on Bybit, that we're finding out that like, wow, we were just super lucky that the same clients that were in Paradigm were basically the same client. Clients didn't have the extra hurdle of onboarding on a new venue when they were trading spreads on Paradigm, and that made things a lot easier for us to sell. And so therefore, spreads as a business on FTX absolutely took off. I think we went from 0 to 500 million a day in like less than 70 days, which is unheard of, right? And so yes, it was favored by institutions because the margin engine was supposedly superior, etc. And there was trust in Sam and the team and all of that, right? And as a result of that, all these institutions participated. It has definitely taken a hit because when we've tried to re-onboard those folks on other exchanges, they were, their first concern is, like, hey, we only trust one exchange now. We don't go to 3 exchanges that we don't trust anymore. And so trust definitely took a hit, right? And trust just takes time to come back, right? That's just like a human thing, rather. But it's helped by, innovations in like product and technology, right? So I think as a part of FTX, the non-custodial, the FTX sort of debacle, the non-custodial narrative started to sound, basically everybody started to like talk about that again, right? And I think that's kind of where that's the lesson that this market has learned, is that you can't really trust anybody, right? Especially with large sums of money. And I think the market, because it's learned and it's been hurt now, it has started to demand that. So I think for this next cycle, having an FTX on chain is probably where the market is going to get. And you've seen as a result of that, a bunch of projects come in. In fact, you've even seen to fill in this trust void, you've seen folks like Gemini and Coinbase throw in their hats and say, hey, you know what, we're going to build an overseas exchange, a perps exchange, because of this trust void that FTX has left, right? And so I think trust has to be refilled, sort of rebuilt. People know that, and two, but the infrastructure I think is more critical to build, where people don't have to trust you with their money. And I think that's kind of the next at least in from an exchange innovation standpoint, I think that's the next sort of like, what's the word, the bleeding edge, I guess, of innovation.
No, fantastic. Yeah, I mean, this is what we're trying to look for, right? I think you brought up that concept of on-chain. Can we look at some of this stuff on-chain, and can it do the job? Because that's what we initially thought it was supposed to do, right? And that's where you build this trust. So I'm going to go back to one of your earliest answers, and we're going to spend the remainder of this fireside chat talking about it. The concept of the institution when it comes to crypto derivatives, because you and I both know, right? When institutions come in, when I talk about institutions, I mean the TradFi, the big boys, right? When they come into this space, they bring with them the type of size that literally helps gloss over any illiquidity that there is present because of what they do. Do you see a world where, just hypothesizing right now, one of the major banks in the world goes up to you at Paradigm and says, look, we're going to start onboarding, you're going to be our platform of the future for this, rather than reinventing the wheel?
Yeah, I mean, it's a funny question because we always seem like we're close, but it always takes 5x more time than, because the conversations are happening. They're not happening, and they've been happening for the last like year or more. It always feels like we're right on the cusp of a really mainstream name coming in and putting, just trading, like forget putting on size, even just the initial act of trading. But again, I think because there were so many setbacks last year, if we didn't have these 5 black swans, back to back, that completely eroded trust in the ecosystem, I probably think we would be there right now. But I think we took a hit, and the industry was set back by at least a year, if not more, from a trust standpoint, right? Will it happen back in a year? Again, I feel like the conversations are there, they're happening. Nobody's really gone away. There's a few names here and there that have said, hey, we're completely on pause. But everyone else, continues to invest, albeit a little bit more cautiously, right? But they're still investing in this space, at least from our conversations.
Oh, fantastic. I think we see the same as well. The type of conversations we have are very similar. And I mean, if you want to look on the positive side, right, half glass full argument is the fact that, well, if they're not really going to come in the next 1 year, that means we have 1 year to continue to build, to expound upon the technology we have, and put in place infrastructure that they are comfortable with, that they are used to.
Absolutely.
So, I mean, I'm not going to give you open mic session because I don't believe in that concept, but I will come close to it. What's next for Paradigm? What is your vision? What is the next 1 year, the next 5 years out? What are you looking to do for this space?
Yeah, so I think Paradigm is an asset agnostic, venue agnostic, dealer agnostic liquidity network. That means we don't we don't take custody, we don't take a view on which product is going to take off. We want to connect the entire ecosystem, right? Ecosystem, we want to connect CFI, DeFi, all the exchanges, and provide that sort of central point where people can just access liquidity across a host of different exchanges, protocols, dealers, etc. And so far, we've rolled up folks on the option side. Our next sort of obvious one is futures, which is why we've really invested in futures over the last year or so, and specifically spreads, and roll up those kinds of products. But the sort of high level theme here is right now Paradigm is a network of exchanges where you can come in and trade Deribit products on Deribit, and Bybit products on Bybit, Bit.com products on Bit.com, etc. But we've the holy grail, I think, is to be able to allow people to trade things atomically cross exchange, right? And that's something we're really investing in. This year, for the balance of this year, we have a proprietary sort of design that we've been working on we've proposed it to a few exchanges, and we're working with a couple to actually implement this endpoint where we'll be able to sort of guarantee atomicity. If you want to trade the Bybit perp leg against the Deribit perp leg, you'll be able to sort of do that atomically through Paradigm, and that's just the part of the technology we're building. So that is something near to medium term. Of course, we say that, but it just ends up taking longer than that. So I think for the next year and a half, it will sort of occupy us. And then again, the continue on this DeFi is a little bit dead right now, but I think getting, like you said, getting to the point where we are ready to catch the next, the next time momentum starts to accelerate again, right? And I think that's what we're focused on for this year, and then. We also have ambitions in DeFi. It was very clear last year that we couldn't just roll up protocols, but we also wanted to build our own protocol itself. And so we're working on some stuff, but it's not like an immediate thing. But we've been experimenting with building. Again, going back to the narrative of, can we build FTX on chain, for instance, like from a clearing and a derivatives standpoint? And I think that's something we're experimenting with.
Fantastic. Well, it's very exciting times. Look, we've got a couple of seconds left, mate. Any final pearls of wisdom for the budding trader out there in the crypto derivatives market right now?
I think less so for traders and more so for builders, because that's my perspective, and it has been for the last 2 years. It seems dead right now, but I think this bear markets are very exciting. I mean, we were born in the bear market, and it's just every time we've kept our head down and continued to build. The next time around when things come back up, we just move from strength to strength. So my take would be to just hang in there. This will pass, and there is light at the end of the tunnel for sure.
Fantastic. Well, thank you very much. We have come to the end of the session, and it has been a pleasure having you here today.
Likewise.
Hope you've enjoyed it as much as I have, and hopefully the audience tuning in has enjoyed it as well. But thank you very much, and have a great rest of the week, sir.
Oh, thank you, CJ. I appreciate it. Take care, guys. Bye.
Take care.